So for those of you who don't know, Chainlink is a hexagon-shaped icon, which is probably my favorite thing about it. It's just like Hex. Just kidding. So Chainlink is a protocol that connects basically just a whole bunch of ecosystems to each other, whether it's the Ethereum, the Arbitrum, Binance, Optimum. There's a whole fucking list of them. But anyways, Chainlink has been adopted on the Coinbase network, Base, which is the they've just recently launched. I want to say they launched on August 9th. But this is some interesting information because it if Nate was here, man, he would go into the whole bit about why this feeds into the what's the name of the theory, like everything is coming together all at once and it's all going to fall apart because of one thing.
The
Oh
perfect
man.
storm theory, brother.
Yeah, the
Perfect
perfect
storm.
storm theory, right? So Chainlink is the chosen protocol for the World Economic Forum, the Swift payment system, the guys that want you to eat the bugs and be super duper happy about it. So it's adopted by like all those great and horrible bad guys that want us to lose everything. But anyways, Base has been powering Chainlink, or they've been paying the developers for probably about 6 months now. I think they've been covering the cost of development and everything, and so they finally just launched. So this is one more system to be added to the Chainlink network. And for those of you who've been watching the price for Chainlink over the past week, it's been going up and up and up steadily. And so like whether that is a result of this bit of news or also the fact that Chainlink is doing its very aptly named SmartCon this week over in Barcelona, Spain. I don't know, maybe sort of ties in with what Jay's got here with Coinbase being accepted in Spain or not. I got no clue there. But the cool thing that I wanted to focus on with this article isn't so much the Chainlink portion, but it's the Base portion. Like Coinbase is picking up more and more and more like market share of the cryptocurrency world, like as time goes forward. Like if it's whether it's them just being the oldest, or I think they are the oldest centralized exchange. Correct me if I'm wrong on that. But Coinbase is just getting everything, and Chainlink's starting to get everything, and it's all starting to come together in this great big old world full of stuff. Jay, you look like you got something there, bro.
Yeah, well, so a bit of a background for the folks that might not be familiar with the project. So Chainlink is actually, I guess the easiest way to explain it is they're trying to create a layer that exists underneath the layer ones, like Bitcoin, like Ethereum, Pulse Chain, etc. Right? And so some people actually refer to them as layer zeros. And the function for layer zeros is to be able to connect all of these different layer ones to each other, right? They want to serve as a bridge because right now there's absolutely no way for you to jump from Ethereum to Pulse Chain to Bitcoin. There's no easy way for you to do that, right? You usually have to use some kind of native bridge from that chain in order to bring over assets from one chain to another, right? A lot of you guys that watch us are very familiar with the Pulse Chain bridge, right? And that's the bridge that we use in order to bring our assets over from Ethereum over to Pulse Chain. And Chainlink and other networks like it, right? Other projects like it are trying to build something that exists underneath all of this infrastructure um, that are the L1s in order for us to be able to bring information to and from these L1s in a much easier manner, right? One, quicker, and two, in a way that's a lot less expensive. Because I'm pretty sure that a lot of you guys here have experienced that when there's a lot of volume of transactions on the network, right? When it's really busy, that even those bridge fees, you combine the bridge fees, you combine the trading fees, you can buy you put that on top of the buying and the selling fees, right? And if you're like, for example, if we're in the bull market and you had to add up all those fees and you were trying to move a significant amount of capital around, you're going to be paying several $100. I've heard of some people paying several $1,000. Now obviously that might not be such a big deal in the context of tens of thousands, hundreds of thousands of millions of dollars that you might be moving during the bull market. But I mean, it's still like you work for that money, right? It's like you did the research, you invested in the token, you made the risk, and so you want to be able to keep as much of that capital as possible, right? And so you don't want to be able, like, you don't want to have to deal with paying all of these fees. And so something like Chainlink, right, something that connects all of these different ecosystems together could serve as a way to reduce those fees, right? And a way for them to communicate, right? So you don't have to go back and forth in such a roundabout manner in order for you to get from one network to the other, right? Can you guys imagine? Like, let's say there was no internet and there was no phones, right? And we were trying to get a message from the U.S. like or let's I'm going to use myself as an example, right? I'm trying to communicate to my family back in the Philippines. Like, how much of a pain in the ass would it be for me to get a message across, right? I'm gonna have to use what, a messenger pigeon, right? Or like, right?
Just
So it'll be a really big pain in the ass. And so things like Chainlink, right, is really important for them to succeed because it's going to make the communication aspect, right, back and forth between all of these different ecosystems a lot more easy, a lot more streamlined, a lot faster, and a lot cheaper. Kind of like the same way that the internet makes allows us to communicate with each other much easier.
so there's that. So it not only makes things cheaper, but my understanding is it also eliminates a lot of the risk that comes with bridging. So, like, the bridges get hacked a shit ton. Bridges are like one of the number one points of failure in like the cryptocurrency world, as far as like people taking money from other people. If you don't have to bridge assets from one chain to another, and you can just use a Chainlink oracle to give you like price feeds or something to that extent, I'm not entirely sure if Chainlink makes bridges obsolete, or this, if it bolsters the security aspects of not having to use bridges or not. I think that I think that would be quite interesting if that ends up being the case as well, not just like a function of price, but also a function of security.
I've often argued that I thought projects like Chainlink and Polkadot, I think they came out a little too soon. You guys think we're getting ripe for the time period where it's starting to click, where, because complete interoperability, the ability to do that has been proven super difficult for the last decade.
Mm-hmm.
So, it's like I said, with projects like Polkadot and with Chainlink, the idea is there. It's just the ability to apply and the ability to adopt. I think they were a little bit too soon. Do you guys think we're coming to a point, especially in this cycle, where it might be a little bit more valuable to start considering those for investment, investment vehicles and stuff like that?
I think it might be about.
Go ahead.
Thanks. I was gonna say, I think it might be about time for that. One of the things the article points out is that this is a bit of an iteration on the technology itself. So previously, we've been very used to having like ERC20 tokens, which is just Ethereum wrapped tokens, which is just a bit of Ethereum wrapped to look like something else that it's trying to encapsulate. Versus what this is doing, it's actually trying to find ways to transfer things through smart contracts, either natively or basically lock up or destroy coins on one chain and at the same time mint them on another. I think personally, this is a bit of an evolution in the way that we do things. It might not be the final solution or a better solution, but it's innovation. So I think there is some opportunity there.
Yeah. No, I agree. Does really good point, Zenith, right? So if you guys can visualize this. So I'm going to use Pulse Chain again as an example because a lot of our audience have experience using their bridge. So when you transfer your Ethereum, right, or your USDC or whatever it is asset that you like, and you're transferring it over to Pulse Chain, right? What Zenith said, the bridge, which is a contract, wraps that token in such a way so that your asset can be recognized and used in the Pulse Chain ecosystem. So what Chainlink is trying to do, and other protocols like it, is completely do away with the wrapping mechanism, right? You know how when you can send, like, let's say I have assets on Coinbase, I want to send it over to my MetaMask. All I got to do is scan a QR code, and then it sends it, and it's in my wallet within a few seconds. That's basically what I'm assuming what Chainlink and protocols like that are trying to accomplish, right? They're trying to do away with the wrapping, which is an extra step. It increases your attack surface, and like the variables that I spoke about earlier, right? It increases the amount of time that's needed. It increases the fees associated with it, and it's just a whole lot of effort in order to just be able to get your assets from one place to another, right? And so, unfortunately, we have to use those protocols because it's really the only options that we have currently. And so, the success of companies like Chainlink is actually, I think, pretty imperative to being able to get more people within the traditional financial space and just your average retail consumer in general. I think protocols like Chainlink are going to be important in that aspect because people don't want to have to go through all of these loops just to get their assets from one place to another, right? Because it's a big fucking pain in the ass. Now, to Josh's question, I think yes, when Chainlink and Polkadot came out, the first when they initially came out, I think the technology was obviously a bit too early, right? Because one, the space was much smaller, and two, the technology just hadn't caught up to that degree, right? And then nobody was really interested just quite yet in using it. But now, because we've had a mass exodus of people moving from the traditional financial space into cryptocurrency, now I think is the time where you need to be a little bit more. You need some. What's the word I'm looking? What's the word I'm looking for? God, my vocabulary is escaping me. But you need to have some initiative, right? And so that's why I think Chainlink is making a good move here by partnering with Base, because as I was speaking, I was talking about this with the guys earlier. Like Chainlink is running away with the users in terms of the layer zeros. So I was an investor in Polkadot very early, right? I've since exited the position, but it was the other main competitor to Chainlink that was trying to provide this CCIP, right? This cross-chain interoperability functionality
Protocol.
to layer ones, right? And so I was very interested. I was like, I'm hearing a lot of stuff about Chainlink, but I have not heard a peep from anybody in Polkadot, bro. And so I just I did some quick reading on what Polkadot has been into, and there was one article recently published about a guy who was also interested in the same thing, and he was trying to go over the metrics. So I'm gonna give you guys some quick tidbits here about exactly what's been going on at Polkadot. All right, so number one, Polkadot had a really weak rally earlier this year, right? For the most part, it's been down and to the right for the majority of the year, and it's still currently trying to find its lows. Now, Link, right, is just sitting 2x already, like from its lows, which it seemed like it's found earlier in June. And then to kind of like make matters worse for Polkadot, their social media engagement is down. The activity on the actual Polkadot network is down 19.9% over the past month, and their revenue is down 13.3% within the same time period. So it's not only reflecting in their charts, it's reflecting in their social media engagement across every platform. And you can look, Polkadot actually tried to get some engagement from their followers. I think this was on Twitter, right? They were trying to promote some kind of like new service or some kind of new activity that you do on a network, and it was a fucking ghost town. So it seems like Chainlink is pretty much pulling ahead of Polkadot in terms of this race to see who can be the first layer zero to provide for all of these major platforms.
I got a couple points that I want to bring up. Then I want to pose another question. So Chainlink launched its cross-chain NOP protocol back in February of 2023, right? And I've already mentioned how over the last decade, it's proven extremely difficult to get complete interoperability across blockchains. When you think about Coinbase, or when you think about Base, Base is new, but it still packs a heavy punch in brandability and like popularity because it's centered around Coinbase. And what Coinbase is doing, creating sort of that all-in-one solution, blending a centralized exchange with a layer 2 blockchain and all that different sort of stuff. I think Base is hitting on all the gears at the right time right now, and especially with plugging in this Chainlink, partnering up with Chainlink and plugging in this protocol into the layer 2 blockchain. So when you think of those sort of aspects, if the layer twos do become the predominant theme in this bull cycle, how much does this bear market preparation that Base is doing along with Chainlink, how much does it set them out? How well does it put them out in front of the competition, so to speak, to sort of be, the front runner for this coming bull cycle?
Could you condense that question a little bit?
Josh, you're muted, brother.
There we go. Yeah, I was muted. I got it. Yeah, I got it. Yeah, that was a lot to put it together and then ask a question around. So I'll simplify the question. Number one is, does with the explosion of layer twos coming up, in this bull cycle already, with the explosion of layer twos, number one is, do you think that that's going to be one of the predominant themes in this bull cycle, is layer twos? And if layer twos is the predominant theme, how much does this set Base up to be the leader in the L2 race for this bull cycle?
I've got no idea what the story is going to be for this cycle. There have been a whole lot of layer twos popping up, so I could definitely see that being the case. And I think that there is an argument to be made that Base is going to be a strong runner just because it's, tied so closely to Coinbase, which is, just one of the biggest exchanges. So I think that it is certainly possible. I don't know, because I'm not terribly in the weeds with all these things, but I could see that campfire story, that narrative playing out to holding water and whatnot.
Just taking a quick look at, I needed a refresher on this one, I will fully admit. Just looking at the layer twos by market cap, we got Polygon at the top with about 5 billion, Arbitrum below it, along with Immutable X, each at 1 billion. And then we got Mantle, Synthetics, and Optimism. Optimism down there at about 300 million. And then after that, it just drops off pretty quickly. So ask yourself, do you think the Base blockchain is going to do better than all the ones that I just listed that have been around for a little bit, also have some pretty good layer ones with them? It's possible. It's entirely possible. Like we mentioned earlier, Coinbase has absolutely become a giant in the centralized exchange world, especially here in the United States. So that, I think, is going to be a big boost to it. However, personally, I still think this next upcoming cycle is going to be a little more focused on the layer ones. So most notably, it could be because I'm a bit of a Pulse Chain maxi. I think Pulse Chain has a lot of room to go, especially once Richard Hart clears up everything with the SEC. Additionally, I think you have chains like Phantom that they have tons of upside, and a lot of the potential is just untapped there. So personally, I still see the layer ones being the focus, but layer twos could absolutely sneak into this race and start stealing the show a bit towards the end.
Yo, I wanted to point something out there because Zenith brought out the market cap. Now, I'm surprised. Don't you? So I'm pretty sure Zenith has heard this because he's a Pulse Chain maxi, or maybe no, maybe he's a Pulse Chain maxi and just happens to be not a Richard Hart maxi. But bro, have you heard him say Richard Hart said it a lot, that market cap is a vanity metric, doesn't really mean a lot.
I mean, yeah, it's basically just a dick measuring contest. Besides, I'm also using Richard Hart's least favorite website for this, Coin Rankings. So, yeah, he would not be happy with me. But hey, I just needed a quick reference, and there we go.
No. I wasn't doing that to kind of bag on you. I was just trying.
I know.
I was mentioning that to elucidate a point, right? Because market cap is actually pretty important, right? I'm not saying it's the be all end all, but I think it's one of those important variables that you do need to consider when it comes to investing, right? The market cap of a coin is very important, right? Because if you're somebody who's looking for the next big opportunity where you can make a ton of X's, you're not going to look at a market cap that has a market cap close to Bitcoin, right? That's just fucking silly. You're not going to get the excess that you're going to get from Pepe on day one versus Bitcoin 10 years into its cycle, right? So in that extent, market cap is pretty important metric to look at. What I was alluding to, though, was when you brought up the market cap numbers, I was thinking to myself, well, Base is not going to be on there because Base and Coinbase, they don't have a ticker, right? They have a ticker in the stock market, but they don't have a ticker they don't have a token. They don't have a crypto asset, right? They're just a layer two. what I do want to point people out, right? And maybe you guys have comments on this. Have any of you looked at the activity on Base on DeFi Llama? A lot of people were expecting Base activity to die down after the initial hype around it, man. But I'm not going to spoil anything. Look at where Base right now sits in terms of rankings on DeFi Llama. Those of you who've been fucking with Friendtech probably knows exactly why that's happening. It looks like Zenith's looking up DeFi Llama right now.
That's exactly.
I'm
what it
trying,
looks
brother.
like.
I'll be honest. This is my first time on the website. I don't entirely understand the data. So August, we're looking at what, 0 total value locked, and then in September we have about 400 million in total value locked, and we've gone down a little bit. We haven't dropped below 350 million total value locked.
Yeah. So what basically what so if you guys look at DeFi Llama, a lot of people were basically looking at the amount of volume of transactions and the amount of dollars basically moving in and out of that system to decrease significantly after initial hype died down. But it seems like Base has a lot of win in its sales, and their volume of transactions and the money going through that system is not slowing down. Right? It's still pretty high considering that when you have a new protocol, like whether it's a layer 1 or a layer 2 first launch, you're obviously going to see a boost of activity and transactions on the protocol because everybody's been waiting for it, right? But then you expect it to die down, right? I'm sure a lot of you guys who are fans of different stuff like Optimism, like Avalanche, like Arbitrum, like look, these are great protocols, but the amount of volume going through these chains is like when you compare to Bitcoin and Ethereum, they're like you can't even compare the two, right? And Base, as a layer 2, they've still like the amount of people using their platform on a daily basis is still pretty high. So it's not dying down the way that people thought initially, which is what I was kind of like what I wanted to point out when Zenith brought up the market cap, because in that sense, the market cap was a vanity metric. What you needed to do was, are people using the platform? Are people transacting on the platform? And are people getting involved in it? And it seems like Coinbase is.
Yeah, it's looking like they're just under. Ah, shit! I just had it pulled up. They are just under Avalanche and just above Solana. Base at 0.92% of total value locked on all chains. Oh wait, no, we're not looking at total value locked. We're looking at transactions, right?
Yes, sir.
Never mind. I was looking at a different thing.
Yeah.
Hang on. Go ahead. Keep talking. I'm in the wrong spot on the.
a lot of people are thinking it's because of Friendtech. Have you guys have explored that? That social media thing.
Yeah, that's like basically you. Shit. It's like you put some sort of value behind someone's like Twitter account or something like that.
Yeah, you can
Like
buy
you
and
can
sell
buy
your
people's
account and shit.
Twitter stock. Yeah.
Mm-hmm.
Yeah. So if you know someone who's going to be like an up and coming Twitter-Rooney member, then
Yep. Yeah, you could monetize that a lot easier. So that's a neat little thing, right? It's because I've known of like offhand of other companies trying to start Web3 social media, but a lot of them have kind of lost steam and has just been lost into the void, right? You never hear from them again. And then you hear about this Friendtech stuff that's being built on Coinbase, and it seems like it's getting really popular, and it's also not losing steam. Whether it can maintain that momentum, who knows? But here's the thing, right? At the very least, I've heard about it, and I know people are talking about it versus all the other ones that have just been kind of lost into the void.
I'm curious to know, Zenith. You think that this upcoming cycle is going to remain the focus is going to be L1? That's what you think?
Yeah, I still think a lot of L1s are going to be the focus. I think what's going to happen at the end of the cycle, notably, is we're going to get the death of a lot of L1s that don't quite make the cut. And then after that, once we have that big culling, that's when we can start really seeing layer 2s compete. Because what it looks like to me on the market is, if you look at it, is there's a lot of layer 1 chains that have their own layer 2 chains. And what I see with upcoming competition between layer 2s is that there's going to be actual like competitive spirit on the same layer 1 chains. It's basically right now everyone's still kind of like going for the layer 1 space. Having a layer 2 is a bit of added bonus on top of that. But once we figure out kind of who the winners and losers are in the long term, the layer 1s, then people can start competing for that spot on layer 1 chains as the big one or a very specific or niche layer 2 for those chains. So I mean, it might be a little, this is all very theoretical and highfalutin and out there right now, but we gotta get through the bear market or the bull market first before we start thinking about the layer 2 stuff, in my opinion.
So is your theory that this last cycle was sort of the birth of the L1, and now this one is going to be the maintaining and the solidifying, so to speak? I guess what I'm asking is, do you think in order for a successful L1 to to looking forward, do you think the most successful L1s have already been created and are already in use? Or do you think it's still time for brand new L1s to be created this cycle that could still succeed?
I understand that some of these chains are a little bit older than I am, so I'm going to do my best here. So Bitcoin was the original L1. Then after that, we had Litecoin was another notable one. Crap. Ethereum is obviously another massive player. Right now, if you ask me what the two largest chains are, I think it's pretty obvious. It's Bitcoin and Ethereum. Ethereum has been around since 2015. So we're 2013 now, which means it's been around for 8 years, which is basically 2 full cycles. A lot of the other L1s, you can't say that. So I think once you start making it past that second cycle, you start getting a lot of that validity and a lot of the staying power, and you start being that mainstay focus. So like personally, when I evaluate the chains, I say Bitcoin is the 99.9% chance of sticking around. It's the original decentralized blockchain. It's the OG crypto. And then after that, we have Ethereum. Ethereum, I have probably like a 95% chance of it making the test of time and sticking around. The big reason I say that is because it developed the smart contracts. Then all the other ones, we got to figure out what they're actually adding value wise. So I mentioned it earlier, Pulse Chain and Phantom. I like those two chains specifically because they do a good amount of effort to solve the Ethereum problems. Obviously, they're pretty close to Ethereum. Well, Pulse Chain anyways, because it was literally a direct copy. It tries to reduce the gas fees and it reduces block time, versus Phantom tries to actually improve on the tech, improve on how much data is needed to store it, and then also try to create their own virtual machine that is able to kind of like split the timeline, so to speak, run a bunch of calculations, and then reintegrate it to help reduce on costs. Did I answer your question, or did I just ramble?
Yeah, I mean, I agree totally with Zenith, bro. Like, I think so. I know Coinbase kind of made waves with this layer 2. I think they're actually being smart, because I completely agree with Zenith. I think for the majority of the cycle, it's still going to be a focus on L1s, not because there's going to be a lot of new L1s that people are going to be paying attention to. I think people are going to be paying attention to the L1, right? That's going to be Bitcoin. I know a lot of people don't want to fucking hear that, but you have to consider the fact all of the attention right now is on Bitcoin, because all of the big asset managers are funneling their capital into Bitcoin, right? Now, obviously, if you also have to factor Ethereum in there, right? Because it's also another big L1. But in this cycle, people are going to be paying attention predominantly to Bitcoin, and then Ethereum is going to get the majority of the attention afterwards. And anything else, I think we're going to have that trickle-down economics, right? Where money from the biggest gainers are going to flow into assets that are higher in the risk curve, that have lower market caps, that have more potential for excess. But I agree with Zenith. Like I said, I think this is going to be the story of Bitcoin and Ethereum, and how those two get more mainstream adoption, right? Especially if we get some regulations over the next few years. I don't know how that's likely, though, because Gary was like 3 to 5 years before we got any strict regulations. I was like, this boy mad. Mad man.